right, guys, what is going on? What is good? What is good, man? Hopefully you guys had a good weekend. Where are we at? Where are we at, dog? There we go. There you are. Who's here? Who is here on a Monday, big dog? Market Maker Monday. Who's here? Willow, Scott, Capitalist, Jordan, D, Torty, Eberneth, Tiago, Julius, Big James. Is Scooter here? Or is that Scott? Scott, you're Scooter, right? Is that correct? What's good, Cameron? Oh, okay. Yeah. It's a good looking sniper badge you got there. Right? This is a good looking sniper badge you got there, my friend. You know, technically, we've been here longer than 2 years. I can actually make a 48-month one. I thought about it. Was good, Zen? Who was that in the chat earlier? That was Joseph. Did y'all see Joseph's trades today? Like, bro. Disgusting. Utterly preposterousness. Bro is a market maker, 100%. I can tell you right now, if I did trade today, I probably wouldn't have gotten as clean of entries as those. Personally. So I don't know if Joseph's in the chat, but bro is a menace on the charts today. Bro is a menace on the charts today. So good job. Absolutely phenomenal job there. New times? It's the same time. I run on Central Time US. So if the US changed the time, my time gets changed automatically. You know, I'm American. We're lazy. Everything's automated. All right. So, yeah, that's how that goes. So we'll spend a little bit of time in here, and then I got a few things on the agenda today. I got a few things on the agenda. You guys want to do price first, or do you want to have a discussion first? Either put a P or a D in the chat. P for price action or D for discussion. P or D first, chat. What are we doing? Vote right now. Right now, vote. Vote or you're fired. Eberneth said, oh, yep, blocked. She said, oh, she's going to say, oh, shit, when she's blocked from the chat. Oh, well, all right. A lot of P's in the chat. All right, I guess we'll do price action then. Unlike in America, your vote actually matters here. So, all right, I guess we'll do that. I didn't take any trades today. But what I did like, what I really enjoyed looking at, I was on the charts, but I was also doing other things. I have a really cool presentation that I'm working on for you guys. It's going to be really, really awesome. I'm going to give you some of that insight today. But what I definitely like is how we made our low today between the indices, ES and NQ. So let's briefly look at NQ for a moment. Briefly. In the Discord last night, before we got both of those lows, after our open and we traded lower, I did share in the Discord the same lows that we've had on our charts for a little while. The low of February the 6th and November of 2025. Both of those were taken. So what does that mean? What does that mean? I don't know. It can mean anything. But if we are going to trade higher, that's wonderful. But we're going to need some sort of reference point, right? We're either going to need some like pool of liquidity or some higher time frame inefficiency, like a gap or an imbalance. Now, obviously, given such a large gap, you know, we have that. So that is a higher time frame concept, Sunday's gap, right? That gap down and then that continuation lower for the carnage in the evening. And that was that sweep below February 6th low, November from 2025, like 6 months ago, 5 months ago. There. So by the time equities came around, right here, we basically opened near Sunday's gap, which I thought that was interesting. And then we trade above London's high. We come down for this consolidation, all of these lows in here. And this is where things get interesting. So I know we did like a really quick, what's good, Marshall? I know we did a really quick and dirty version of top-down analysis for you, but just to give you some more context. All right. So the 855 low here, we do not make a lower low around like 911, 912. You see that? And now you understand why this is so important here at like 911, that 911 time frame. So what are we doing? What is this called? The analysis that we've just done. We note. Let's go back. We noticed that NQ made a low and then a higher low, and ES same low but makes a lower low. So what do we call that? Well, it's not necessarily a turtle soup. Not necessarily. It is manipulation though, but may not be necessarily a turtle soup. A turtle soup low would be a lower low below an old low. I would classify that as a turtle soup. But divergence would be it. Professional accumulation. All right, someone's been around the block for a little while. Mr. Larry Williams, thank you for that. Professional accumulation on the side of Nasdaq. ES is under manipulation. But I like that answer. Gold star for you. Wasn't expecting that. Mostly you guys disappoint me like 99% of the time. And then 1% of the time you come out with some stuff like that. Makes my day. But yes, either divergence or relative strength analysis, we could say that. Manipulation on ES. Yes. So if that's manipulation, right? If our low has been set, cool, wonderful. Now we want to start looking for long opportunities. So on a 1 minute, you know, I don't really like these right here, like these two down candles there. I mean, I guess it's something, sure. What I like instead is the 922, how we traded off of that. Because what does this low, right? Like this low right here, in 922, we sort of like, we had a Corvette candle here for some reason. So we had a beautiful Corvette candle right here. That's not anything specific. That's just me being funny because, you know, I'm a comedian sometimes. But with that low being here, what does that create for us now? What does that create for us? We have a low, a lower low. Now we have a higher low. So what does that give us? I feel like this is not paid attention to a lot. I know there's a lot of concepts. It's hard to be everywhere, right? To be everywhere is to be nowhere. I get it. But I think this is one of the most slept on concepts. I could be wrong, but you know, from what I see on the internet and from what I see from you guys and even like in my own trading, obviously, I just feel like certain concepts don't get enough attention. The one that gets the least attention has got to be the inverted mitigation. Almost nobody uses the inverted mitigation. Whatever. But yeah, so we could say the intermediate term low or like a fractal low. Sure. If you guys don't know what that is, you're looking at it. It's a low and then a lower low and a higher low. Okay, that's what an intermediate term low is. This could end up being a longer term low, but at least for now, okay, it's an intermediate term low. A lot of people would look at that like an inverted head and shoulders or whatever. And I guess to some degree that's probably true. But without the relative strength analysis, because you don't have that over here, you have a low and then a higher low and then a higher low. That's not an intermediate term low, right? Or inverted head and shoulders or whatever. But that is. And that is the power of context, understanding that this is manipulation. So after that, these down candles, if you didn't long that or that, right, as like the low risk buy, no problem. Just because you missed the low risk buy doesn't mean that the move is over. The move just started. Okay? So now that we have a rally, we have a couple more things in here. We do have an imbalance right here. Pretty fat inversion here as well. And then with the low, high, lower, low formation, what manipulates typically mitigates. So we might not even be there yet, but this is going to set up for a mitigation most likely. All right, so what ends up taking place? We trade back down and, oh my God, I forgot the name. Propulsion. There we go. It's not something that I really use all that much. I maybe have used it like once or twice, but the this would be, I believe, would be considered a propulsion. So basically, when you have a series of down candles that gets respected, and off of that you get another down candle or series, that second one that's what's called a propulsion. What's good, Joey? So that this becomes a propulsion block. It's the term that I learned. Okay. If you didn't long that or this, that does become a beautiful opportunity. And then if you didn't long that, off the propulsion, you get an inversion. And then after that, if you didn't long that or that or that or that, or any of the next candles after that, what manipulates typically what? Bang, mitigates. See that? And then we have higher pricing. See that? Right there. This was all what? I should have started with that, honestly. But 830 right there is equities open. The mitigation under equities open. Inversion, everything in here is under equities open. Now, mind you, I wasn't bullish on the day. I didn't go into Discord or anywhere and say, hey, I'm bullish. I didn't say that at all. I didn't say anything. I didn't really have a bias. If I did have a bias, I actually would have preferred to short. But either way, equities open, trades lower. So can you guys kind of visually see the candle here? Can you visually see it? Can you see that? Yes or no, chat? Yes or no? Let's get some chat participation. Can you see this? Can you see that here? it would be something like, I mean, live price is moving, so it's gonna, you know, it ain't gonna be perfect, but in your mind, or at least in my mind, this is basically what I'm seeing. See that? So hopefully this is like another example for you. And then obviously, like with live price, this would actually, you know, go a little bit lower because the body would technically be here by now. But I think you get it. You get, it's not an impossible thing to understand, because I told you that this candle, right? This candle, I told you it can be a weekly, it could be a daily, it could be hourly, a 15-minute, and it can even be a session, right? Every candle's not going to look just like this. This is a drawing. This is a concept. This is just something that is a common phenomenon. It doesn't mean that the wick has to be, you know, like right here or something. That doesn't mean that at all. It just simply means, hey, you know what? If you're below the session open, those are some of the best long opportunities. Below old lows, right after the next retracement after an intermediate term low. Now, why would he say that? The next retracement after an intermediate term low, could that be its own model? You tell me. You tell me. How many models do I have to give out? How many trading models do I have to give out for you? I tweeted the other day, and I said, you can pretty much frame as many models as you want if it's based on the market maker model framework, the MMXM framework. Now, while I do not really see an MMXM here, it does act like one because it has manipulation, low risk buy, first leg, second leg, you know, up to a new high kind of thing. So it does have that. It does have those signatures, we could say. Oh, Joey is Joseph. See, this is what you guys do, man. You guys have different names in the Discord and on the live stream. I can't keep up, dog. I'm John no matter what, bro. I'm John everywhere. Okay? Unless I show you my trades, then I'm daddy. But everything else is just John. John Fib. Okay? But anyways, hopefully that give you guys some insight today. Did you guys do... Oh, yeah. Oh, yeah, we got to do that now. Did you guys do the homework this weekend? Do you remember I told you to look at market maker models? And I said, hey, look, go mark up every single stage. Go to the lower time frames and see what's in there and study all the stages. Did you guys study that? I'll pause here for a minute and let the chat catch up. Yes or no, chat? Did y'all do it? Tiago said, I have a lot of difficulty understanding where the price is going. At least the most accurate direction is one way. And it's contradictory to think the price will go down and then enter to buy. It is. It is. But those are the best buys. Not Best Buy, the shitty electronics store. Best buy as in you want to long on the way down in a bull market. You want to long on the way down in a bull market. You want to long on the way down in a bull market. You want to long on the way down in a bull market. I don't repeat myself because I like hearing myself talk. I repeat myself so you guys see it visually. Buying on the way down, 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 buying on the way down. It doesn't feel right doing it because it goes counter to what a lot of people are taught in the beginning. People like to buy after an up move. So you want to buy high. That is when you start to take drawdown and now your emotions are in a roller coaster because now you're, you know, immediately in drawdown. Listen, as a human being, as a human being, okay, especially as a trader, you have to realize that being a good person and being a good trader requires you to absolutely do the opposite of your human nature. Your human nature is to be selfish, but it's better to give. Your human nature wants you to take. I need money, I need food, I need clothes, I need shelter. That's your human nature. You have to be opposite and go, you know what? I'll donate some clothes. I'll teach you guys for free. I'll do this. I'll help out this person, whatever, whatever, whatever. In trading, it's almost no different. Your nature wants you to buy on the way up to try and, like, I guess, catch the momentum or whatever. You know, I don't know what people think in that regard. You have to think opposite. I want to buy on the way down, not try to catch the low. If you're a young trader, if you're a beginner trader, if you've only been trading like 2 years or less and you're trying to catch lows, you're going to get your ass handed to you. Probably a lot more than you think. Versus what I teach you guys to do, wait for the low to be set and then play the next retracement or the next one after that. And there is later opportunities, because every stage has unique characteristics. And the market, if it seeks a low, if it's swept the low, it's going to seek at a minimum the next available high. And after that, if it keeps going, it's going to go for the next high and the next high and the next high and however many highs. Now, there's a limit to that. It's not going to fly 1,000 points in one day. But if it sweeps liquidity, it's going to seek opposing liquidity. So it's going to remain bullish until liquidity has been swept or been met, at least. It's order pairing. Okay? The market is designed to get you out, and the market is designed for, it's to set counterparties. All right? A high that's been set, and when the market makes a lower low, there's stops there. So price will be taken to an opposing high for the purposes of smart money order pairing. That's practically the purpose of a market maker model. It's a hedging program for smart money. They're the ones that are buying and buying and buying and buying. Okay? Shift and stay delivery. Now we're going to sell above old highs. We're going to distribute our longs above old highs. They're going to short on the way up to distribute below old lows. Okay? They're the smart money is the one who can take drawdown. They can take all these trades. Buy. So. You can't do that because your fucking leverage is ridiculous. Or you have a $500 account trying to trade micros or E-minis. You're highly over leveraged. Smart money is deep. They have oceans and oceans. Okay? That's not to say that banks can't become insolvent like the Lehman Brothers. Yeah, they got GG'd. That's because they did what retail traders do. They were over leveraged and they paid the price for it. So, anyway, I forgot where I was going with this. I kind of just veered off in the left field. My point, Tiago, is that you have to understand good trading requires you to do almost the opposite of what everybody else does and what's opposite to your natural human nature. It's uncomfortable at first because it doesn't feel right. But you know what does feel right? Getting wick entries and wick exits. So when you do that for the first time, that's what I call when you get bit with the bug. You get bit. Because now you've had your first basically taste of heaven. And you go, "Oh my God. There is a real way to trade phenomenally." And that's your drug. You're hooked. You'll never quit trading after that. Probably. Because that's, it's kind of like a junkie. Right? I've never done meth, but the first time that you take a really, really nasty drug, that's why people get addicted to drugs, because they're constantly chasing that first high or that higher high. They're chasing that turtle soup, okay? And that's why they can never get it, because it's a tolerance thing, right? In trading, it's no different. You buy the low of the day or right after the low of the day and you hold for a really, really good trade, you go, oh my God, I have found the key. Well, you've been given the key, the keys rather, but you finally see it for what it is and you go, okay, this really is an amazing way to trade. But that's what is required of you. Buying below the open, buying manipulation, or right after manipulation, or on the way to opposing liquidity. That's all I'm saying. He said, when I'm at a red light. I don't even know what question I asked for you to say that. Zen, that's crazy. I'm going to just move on then. But what if I think it's going down? Doesn't it make sense? It doesn't make sense to buy, right? No, it does make sense to buy. Buy low, sell high. That's law number one. Tiago, it's probably an experience thing. If it's not clear, don't trade it. When in doubt, stay out. Will we ever see a John Phibb and Jordan Morgan stream collab? I'd be down for that. I mean, I can ask him. I think it also depends on what his schedule looks like. He might be down, but I don't know. I can't speak for him. But I mean, I'd love to. I'd be down for it. I don't mind. I mean, I would stream with most people. I would do a collab with almost anybody. It's just nobody invites me. Nobody cares. But it's okay. Most mentors out there, I'd probably embarrass them anyway. Ego is the enemy, guys. Let's continue. I need to know where to apply mostly. You need to study. I don't believe I didn't change the 1 hour and I thought class was at 1 p.m. Yeah, it's at 1 p.m. EST. All right. That I think is a really good segue into what I have for you. So that was our price action portion for today. I gave you guys a lot. I usually try to give you guys a lot. But that's pretty much going to be it. Okay? Relative strength at the low, buying right after on the way to opposing liquidity. Phenomenal trading. No doubt about it. Okay? And I want to I actually wrote that down and then I found a tweet that I thought was really great and I wanted to share what I shared with them to you. He said, let's talk about book of the month. This is my stream. I'm going to talk about what I want to talk about. Guys, book of the month is Stillness is the Key. Okay? Stillness is the Key by Ryan Holiday. It's a great piece of work. Obviously, that's why I made it book of the month. And I know you guys are enjoying it, and that's great. But we're not going to talk about it just yet. We have to give everybody else a chance to read it. It's only the 9th. Okay? It's only been about a week and 1 day into the month. So we still got to give people a chance to read and catch up. Okay. Here's what they said. They said, my trading is so crippled by my fear of losing and with how quickly I go break even due to that fear of losing. Anyone who has overcome this specific trading problem, please leave some advice. I'm constantly taking great trades, but going break even if I'm up 10 to 20 points. They said points, so I'm assuming that's futures. Now, 10 to 20 points on ES is a wonderful break even. So my guess is that they're talking about NQ. I don't know for a fact, but that's my assumption based on the information provided. Now, this is what I said. Number one, proper risk, anywhere from 1 to 2%. Number two, probabilistic mindset, expect losing trades. Number three, identity. You're not a bad trader or a loser for taking losses in the markets. Number four, dichotomy of control. We don't control the markets, only our actions. We don't control outcomes, only our process. focus on the process, and the outcome after a series of trades, let's say 20 to 30 trades, will take care of itself. And number 5, experience and reflective thinking of past performance with honesty and a focus on improving. So that was my answer to that. I did post this in the Discord, and I did post this on my Instagram story for you guys to see. You can screenshot it, you can save it, you do whatever you want with it. But that's what I think. There are times that I also do the same thing. I mean, I've even recorded and posted trades for you guys where you see me do that. You see me go break even like almost as soon as I enter, right? But you also see that the market never comes back to my entry and it just keeps going. So it's weird seeing for the first time, because you might think, man, he went break even in like the same 5-minute candle, or the like 1 or 2 minutes later on a 1-minute time frame. Like, that's crazy to me. Well, yeah, it's crazy to you. Favensley May, congrats on getting another Top Step funded account. Beautiful. That's their 4th one. I don't know if they're on YouTube right now, or if they're watching the stream right now, but they just sent it to me on my Instagram story. So congrats on the Top Step funded trader cert. I like their new one. Minus the silver part. I think they should have kept it yellow, but who cares? Back to what I was saying. It's, as someone who likes to answer questions like this, what's hard to understand, because the problem is them going break even too quickly. The problem with knowing that is, I do believe that having a better read on price will also help you, because your entry model, I think, does matter when it comes to going break even. Like, as an example, if you're buying this down candle, right, and then the market shoots up like that, that's probably a break even, right? Or maybe like 1 or 2 points. That may or may not have gotten stopped out. I don't know. You can always re-enter too. Like, there's not a rule that says you can't trade after a break even. It's a break even. It doesn't count as a loss. You didn't hit your loss limit. You can re-enter the market. I don't know, why people think like, oh, I got break even, I'm done for the day. What do you mean you're done for the day? It's like 9:30. You still got like however many hours left in the day. What are you talking about? Lewis said, if you're precise, you don't have that problem. Well, obviously, Lewis, that's what I'm getting at. So again, it's hard to know what type of entries they're taking, because as I said earlier, if you're buying on the way up, chances are you're probably going to take drawdown. Or, if you're buying, like, let's say this imbalance right here, and you bought it, and then it goes up, 4 points, and then you go break even, and then you get knocked out, like, yeah, that's a problem. That's a problem. You're not giving the market room to breathe. So, and that's why there's so many answers to that question, because it could be you're over leveraging, so you're scared to lose. So it might be an over leverage. Number 2, you might have the wrong mindset. If you go into a trade, number 1, with the proper risk, and number 2, knowing that you might not win, then you might not have the need, that human nature, right, to go break even super quickly. If you go break even super quickly, you probably don't understand order flow. You probably don't understand how price books, right? I'm not trying to sound mean. I'm not trying to sound like a dick. Seriously. But a lot of people don't know how price actually moves or why it moves. They're looking at indicators, they're looking at tweets, they're looking at moving averages or whatever. They're not understanding liquidity, they're not understanding inefficiencies, they're not understanding time. They're missing a lot. You know what I'm saying? You're trying to build a puzzle with like half the box or less. You're missing a lot of pieces. And you wonder why you struggle. Because you're missing pieces, brother. Or sister. I know there's some ladies probably. But 80 to 90% of my Instagram viewers are men. We got to get more day trading ladies. Ladies actually often do better in trading than men do on average. But I'm getting off topic as I usually do. I don't know where they're entering. So it's hard to say in that regard. But you're not going to be so aggressive with going break even so quickly if your risk is in check, if you're anticipating that, you know what, this trade might not work out. Number 3, identity. Maybe, because this was my life. I can't speak for everybody else, but this was my life. I grew up, right? My first car was a hand-me-down car from my father. That's on my TikTok, I think. Right? It was a Geo Prism. It was black. It had no tinted windows, or it had the roll down windows, bro. I didn't even have a button. I had to roll down, hand crank the windows, bro. Okay? I had 20 jobs by the time I was 20. You know, I was kicked out of school every year from 6th grade onward. Okay? And I was basically treated like this kid or this guy, you know, Jonathan is my real name, but, you know, I was treated in a way that everybody thought I was going to be a failure, that I'm just some loser, you know, whatever. Right? So when I got into trading and I started to taste a little bit of success, that identity, right, like that, like a sort of PTSD, if you will, sort of creeped up on me. John, you got to size up. You got to get better entries because you got some shit to prove. That was my thinking back then. So if I took a loss or a series of losses, right, that was an emotional pain point, because it not only was a hurt to my wallet, but it was a hurt to my ego as well. It was it almost like it was an attack on my identity, because it's like, oh, well, if you can't succeed in trading, then maybe they were right. Maybe you are a loser. You know what I'm saying? That was painful, broski. Very. Like, y'all know that that Asian guy who's like, emotional damage. Like that was real, you know? So that's why I said in number 3 that you might be scared of losing because losing might be an attack on your identity. And that's not the case. You're not a loser because you took 1 or 2 trades. Or let's say you blew a combine, or, you know, Apex did 90% off, so you did an Apex thing and you know, you screwed it up too. Okay. Who hasn't? That doesn't mean you're a bad person. That doesn't mean you're not, you know, that your trading career is over. That doesn't mean that at all. It's a learning opportunity. But you should not tie your identity to your trading success. Okay? I try not to tie my identity to my Corvette. I know it's an awesome car. I smoked the fuck out of somebody yesterday because they were driving like a dick. And we both got at the red light at the same time. I smoked his ass. I should have recorded it. But outside of that, I don't tie my identity to my vehicle. I had plenty of cash cars, okay, that I took care of. And, you know, I kept up with them because that's just where I came from, you know? But your identity is not tied to any of that stuff, not even the clothes that you wear, the hats that you wear, or anything like that. So that's why I tossed that in there. Thank you, Slow. I appreciate it. Number 4, the dichotomy of control. We don't control the markets, only our actions. We don't control the outcomes, only our process. So that is a big key right there, because if you focus on the outcome, right, going break even is a very outcome focused thing. You know, again, this is just an example because I did not trade today, but you know, let's just imagine for a second that, you know, this is something that you're doing, right? And you bought it, it went lower and it went higher a little bit. And so you take your stop, you know, from wherever it was. And as soon as you see like 2 candles in your direction, you know, you're going break even, because you know in the back of your mind, okay, now I can't lose. Now there's no loss whatsoever unless you get slipped. Usually in futures, for ES at least, if you're 1 or 2 points in profit, you're probably not going to get slipped like 8 ticks. That usually doesn't happen unless you're trading NFP, and then you're an idiot. But in any normal condition, you're not going to get slipped. So with that exception, you're not going to take a losing trade. And now you're more comfortable because you know your identity is no longer under attack. And you're not going to feel like a loser because you got break even. You're going to think, well, what did I tell you all the time? At least I didn't lose money. Right? Which is not, again, it's not a bad thing. If it's a real break even, meaning like if the market did make a new high and you took a partial or whatever, or even if you just got it wrong and it came back to your break even and then went lower, that just means you got it wrong. And at least you didn't lose money. That's a good way of looking at it. But if you find yourself in that habit, because trust me, I've been there too, and I still do this every once in a while. But if you find yourself in that habit of like, yeah, I'm break even, and then the market screams in my direction, yeah, you have a problem. Because again, you're outcome focused thinking. You're focused on the outcome. I don't want to lose. You're trading to not lose instead of trading to win. That's your issue. Did y'all hear what I said? I usually don't want to like repeat myself too many times because I think it's corny, but think about that. You're trading to not lose instead of trading to win. What does that mean, John? It means we are all traders to make money. We want to grow our account, right? You're not going to do that if you keep taking break evens over and over again. By trading to win, in order to win, you need to hold your winners for new highs if you're long, okay? That is what you need to do. That's trading to win. Going break even as soon as you can because it's tied to your identity and you're trying to just not lose. That's not it. That's the wrong process. You're outcome focused. You need to, the process says, hey, you know what? You got an intermediate term low, you got a propulsion block, you got an inversion in here. Okay, just watch that. See if the inversion holds. If the inversion holds and then we start to run, then you can go break even. Shit, man, you can't wait 5 minutes? You can't wait 5 minutes? Go take a shower, bro. Go use the bathroom. Go make a steak or some shit. Like, do something for a few minutes if you really have that much of a problem. You know? Order flow is a good way of understanding when you should or should not go break even. And that's process oriented. But you won't know that if you don't understand order flow. You see how all this is like, it's all interconnected like a spider web. It's all interconnected. That's why we talk about all the time, and it's on my Instagram. I know this looks terrible, but it's the successful traders trio. It's the Venn diagram with 3 circles. It's not just your strategy. It's not just your psychology. It's not just your risk management, or even 2 out of the 3. It's all 3 of them. So your psychology, you're going break even because you're focused on not losing, or it's an attack on your identity. You're going break even possibly because you don't understand strategy. You don't understand order flow. Or it could be you're going break even because you're over leveraged, and that's a risk management issue. So do you guys see, like, for real, drop a 1 in the chat if you guys understand what I'm saying. Your issue could be rooted in any category. It could be a strategy problem. It could be a psychological problem. It could be a risk management problem. It could be 2 out of the 3, or it could be all 3. You don't know order flow. You don't know risk management. And your identity is in, I don't want to be a loser, so I don't want to take losing trades. You got a laundry list of issues, my friend. You got a lot to work on. That's what makes trading difficult. The candlesticks are easy. I teach you guys this all the time. I call trades for you all the time. I ego aside, I make it look easy. That's because I give you a bias to what I think is high probability. I don't give you a bias every day. Even on stream, I don't give you stuff every single day. I can't. I can't always find something that I, want to stake as high probability. I can't do it. Okay? If I gave you guys more ideas, I would lower my hit rate here. That's why I make it look easy. If you're trying to trade every single day, if you're trying to, buy all the way up and then sell all the way down, you try to be Spider-Man, okay? I don't recommend to do that. I don't recommend to do that. Okay? So we didn't get too many ones we got 50 people on here, but we didn't get too many ones in the chat. You guys all right? You guys, did I bore you to death? Is that what I did? Did I bore you to death, chat, where you don't want to put a 1 in the chat? All right, last one, number 5. Experience and reflective thinking of past performance with honesty and a focus on improving. You might just have an experience problem. You may just be a beginner trader, right? You may just have a bronze badge, or you may have only been trading for a few months or a couple years. Listen, if you've been trading 2 years or less, you're a baby. You're a baby. 24 months and less, you're an infant. You got diapers, okay? That's just how it is. You need experience to understand this stuff. Even if you get indoctrinated into the good stuff, even if you start with my channel or whoever, you think is a good person to learn from, even then, it takes months and months and more months, because you need to see stuff panning out. You need to see your history. You need to study your history. That was part of Book of the Month last month. Grow from reflective thinking. I promise you, you guys are not going to understand why I handpicked these books specifically until you read them. We might only read a book because of one specific chapter. You don't know that. You don't know that. You might read a whole book and only get one thing out of it. But that one thing could change the trajectory of your life or your trading as well. And that's what makes it worth it. Julius is at work. Yeah. Go over to your boss and tell him you're going to fire him pretty soon. Matter of fact, put him on speaker. I'll cuss him out for you. You want to do that? I'm down. I've done it before. All right. Anyway, I think that's enough for today. I think that's enough. Again, the discussion that we had was on going break even too quickly. It was some random person on Twitter, and I thought it was a great question. They got a lot of comments, and I shared it. I quoted it on my own. So I shared it on my Twitter with my own particular tweet. So that's what we went over, those 5 points that I talked about, because it could be anything. It could be any number. It could be trading strategy. It could be money management, or your psychology, or all 3. I don't know. Okay. But hopefully that gives you guys some insight. Hopefully you are a better person after the stream than before. That's always my goal. Incremental improvements. Remember Atomic Habits, 1% better every day. And hopefully reviewing this question and reviewing some of the price action today has made you 1% better. Maybe it did, maybe it didn't, but that's my hope for you. Okay? You're welcome. Y'all be good, be blessed, make good decisions, and I'll see you guys tomorrow on the 10th. Tiago said, you said earlier I need to study to understand context more clear. Where do I start and where do I finish? He said, where do I finish? That's a fucking wild question to me. Where can you start on my YouTube channel is the free beginner series. Go with the free beginner series. Start with that. Or in the Discord, there's a start here tab that's got a Excel spreadsheet in there, and you can roll with that too. So, y'all be good, man. I'll see you tomorrow.